Assalamualaikum warahmatullahi wabarakatuh. Thank you for coming to this presentation and honored to meet you here. I would like to say thank you very much for coming to my presentation. It's great to see you all. Let me introduce myself. My name is Heri Sabtonugroho. I'm from Universitas Negeri Jakarta. The purpose of the presentation is the effect of free cash flow, investment opportunities, and company size on capital expenditure. My supervisor one is Santi Susanti SPD MAK, supervisor two Indah Mulyasari SE AK MAK. Introduction, background, formulation of the problem, benefit of research. Background. The capital market is expected to able to increase corporate funding source for national development through the sale of shares of the company listed on the Indonesia Stock Exchange. When the activities to the needs to be carried out so that the company remains standing and increase the properties or of shareholders is investing. Company activities in investment can be done by way of capital expenditure or capital expenditure. The investment made in from capital expenditure is very necessary long-term investment for the company. How much cash does the company have and can be used to invest in capital expenditure? Free cash flow is a measuring tool to find out the amount of money for after spending. Analyze capital expenditure forecast can reduce the information asymmetry between a firm and its capital providers, thereby reducing the underinvestment associated with capital expenditure. Capital expenditure also requires a lot of funds by looking the prospect opportunities achieved by the company and considering the current size of the company. One sector that spends capital expenditure at a fairly high level is the mining sector. For companies in the mining sector, they will certainly use most of their capital expenditure for land, property, heavy equipment, factories, and machines. This shows that the decline in the sustained level of mining company production shows national GDP to also decrease. The mining sector has a large contribution to national GDP when compared to other sectors. Background capital expenditure that is not managed effectively will have a negative impact on the survival of the company. Stable free cash flow will affect the quality of the company's capital expenditure. Investment opportunity affect the composition and activities of company capital expenditure because with the interest of shareholders. Company size provided by total sales will determine the amount of company capital expenditure. There are inconsistent results from previous research on capital expenditure analysis. Formulation of the problem. Does free cash flow affect company spending? Does investment opportunity affect capital spending? Does company size affect capital expenditure? Benefit of the research. For the written to broaden the author's insight and knowledge. For science discipline as reference material to provide empirical evidence regarding the effect of free cash flow, investment opportunity, and company size on capital expenditure in mining companies. For decision maker, to make the managerial and investor decision in analyzing the financial information of mining companies, thereby assisting in the process of making funding decisions in terms of investment related to capital expenditure. for company as it input for money companies to be taken into consideration in planning their funding, especially regarding capital expenditure. But two literature review. Capital expenditure definition. Capital expenditure are funds allocated or planned in the budget to buy, repair, replace, and everything that is included in the company fixed asset in accounting. Capital expenditure can also be interpreted as expenditure related to the ownership of an asset or fixed asset that has a useful life of more than an accounting period and therefore must be partially capitalized with the acquisition price of the fixed asset concerned. Free cash flow definition define free cash flow as direct general cash flow available to the company. Free cash flow is cash from operating activities, mean a capital expenditure that the company spends to meet current production capacity. Free cash flow can be used for discretionary use such as acquisition and growth-oriented capital expenditure, debt payment, and payment to shareholders in the form or dividends. Free cash flow can be used for discretionary use such as acquisition and growth-oriented capital expenditure, debt service, and payment to shareholders in the form of dividends. This means that the greater the free cash flow available in the company, the healthier the company is because it has available cash for growth, debt payment, and dividends. Investment opportunity. Definition. Investment opportunity are a combination of real asset and investment option in the future. On the other hand, if a company profitable investment opportunity are very low, then there is a possibility of spending up or delaying the project. The ability to accelerate or delay a project will allow a company to be more compliant with a stable dividend policy so that it has an impact on the company capital expenditure. Firm size. According to her, company size is a reflection of the total asset owned by a company. The company itself is categorized into the two types, namely small-scale company and large-scale company. Large-scale company tend to attract investors will impact capital expenditure. So it can be said that company size is measured by the company total asset obtained by the company's financial statement. Reserve framework. This is reserve framework. Research hypothesis. The first, the effect of free cash flow on capital expenditure. Two, the effect of investment opportunities on capital expenditure. Three, effect of company size on capital expenditure. And four, the effect of free cash flow, investment opportunities, and company size in capital expenditure. Top three, research method. Research method, types of research by using quantitative methods, type and source data. The source is data is secondary. The data are financial reports and annual reports of mining sector companies at IDX for 2019 until 2022. Research data obtained from the website IDX ID and company page. Data collection technique. In obtain research data, research used two methods, namely documentation and literature study. The population, research population, this 60 company, the population in the Study are 60 mining sector companies that have gone public on the Indonesian Stock Exchange in 2019 until 2022. It's a sample. We have There are 2,027 companies that meet the criteria that have been sampled from 6 companies that are included in the mining sector. This research so the number was 108. Method is purposive sampling. Purposive sampling is a sample selection technique based on certain characteristics or criteria that are related to a predetermined population. Variable operational definition. Capital expenditure, CapEx, still logarithm natural, purchase plan, property and equipment on the cash flow statement. Free cash flow, PGF, investment opportunity, and firm size. This is variable operational definition. Data analysis technique. Data analysis tools is SPSS, descriptive statistical analysis, mean, standard deviation, variance, maximum, minimum, sum, range, kurtosis, and skewness or distribution skewness. Classic assumption test, normality test, collinearity test, heteroscedasticity test, and autocorrelation test. Hypothesis test, multiple linear regression analysis, and hypothesis testing is partial test, simulation test, and test the coefficient of determination. Bab 4, results and discussion. Analysis descriptive. This is data. The smallest capital expenditure is 17,083 at PT Cikatah Tbk in 2001, and the highest is 30,006 at PT Merdeka Copper Gold Tbk in 2022. This is statistic capital expenditure. Histogram by data. Next. This is free cash flow in descriptive data. The small cash flow is mean 021, namely at PT Toba Sejahtera Tbk in 2019, and a maximum of 075 at PT Mitra Bara Adi Perdana Tbk in 2022. Next is investment opportunity. The minimum investment opportunity is 0,045, namely at PT Prima Andalan Mandiri Tbk in 2022, and highest 3931 at PT Bayan Resource Tbk in 2019. And then is company size, the smallest company size at PT Adaro Energi Tbk in 2019. Yes, this is analysis regression berganda. From the results of the analysis of the table above using the SPSS version 2000 to 27 program, the regression equation for the result was 10. This is the linear regression equation as follow. Yeah, mean 8961 plus 2766 FCF plus 0005 KI plus 1161 UP plus E. From the equation, it can be explained as follows. A constant value of mean 8961 can be interpreted as if the variable value is constant or does not increase. Then the capital expenditure variable will experience a decrease of mean 8961. The regression coefficient value on the free cash flow variable is 2766, which means that if the free cash flow variable increased by 1 unit, the capital expenditure variable will experience an increase of 2766, assuming the other independent variables remain constants. The regression coefficient value on the investment opportunity variable is 0005, which means that if the investment opportunity variable increased by 1 unit, the capital expenditure variable will experience an increase of 0005, assuming the other independent variable remain constant. The regression coefficient value on the company size variable x3 is 1161, which means that if the company size variable x3 increased by 1 unit, the capital expenditure variable will experience an increase of 1161, assuming the other independent variable remain constant. Uji normality test. Based on the table, the output result of normality test calculation, it is known that the assumed six-tail understanding value 00x7 005 or greater than 005. This also that the signal level of the resident is greater than 005, so it can be interpreted. The data is in the study, namely the cash flow, investment opportunity, company size, and capital expenditure used in the regression model are normal distribution. Next. Linearity testing is to determine whether the multiple regression data is linear or not. The conclusion is drawn using the test probability by assessing the output in ANOVA table. If the significant effect of deviation probability is greater 0.0005, then the influence between variable can be said to be linear. Then if the significant level from not greater 0.005, then the influence between variable can be said to be nonlinear. This is linearity test X2 for Y and linearity test X3 to Y. And then uji, and then multicollinearity test. That is this test look at whether there is a correlation between the independent variable and the regression model, and to analyze the data in this test by looking at the tolerance value greater 10% or 1101 and the phi EV value not greater than. This is no material connectivity between the independent variable in the regression model. This is heteroscedasticity test. A good regression equation is if there is no in the research experiment will occur if the scatter plot point of the data resides between the spread and research spread below or above the center point or origin number 0 on the y-axis and do not have a regular pattern. Heteroscedasticity occurs if the scatter plot points have a regular pattern, either narrowing, widening, or wavy. Based on the result of the heteroscedasticity test using a scatter plot graph, it is known that the points are above and below the number 0 on the y-axis and the points are spread out and do not form a clear pattern, so it can be interpreted that heteroscedasticity does not occur. Therefore, it can be concluded that the regression model is free from the classic heterogeneous assumption test is suitable for use. The correct regression equation is on does not have problem autocorrelation. If this occurs, then the regression equation will be inappropriate or not suitable for use for prediction. According in his book Integration Revolution, trees in IBM. The condition is that is no autocorrelation if the driven value is into until 2 from the result of the correlation in it is known that the Dewey value is 1091, so it can be said there is no autocorrelation. And then UGT, the purpose of this test is to identify whether in a regression model as independent variable has a significance on the variable or not. UGF, the test is used with the aim of determining whether there is a significant influence or not from all independent variable to the dependent variable. F2 greater F label that it can be stated that the relationship between the independent variable in the data, the table was obtained in this end. It is known that the corporate F value is 93,067 greater to 3000 F table and sig equal to 0 not greater 005. It can be interpreted the simulation of variable free cash flow, infinite opportunity, and company size influence in the capital expenditure variable Y. With this, it is that the hypothesis that the outer purpose is there is an influence of free cash flow for investment opportunity and company size on capital expenditure received. This is SIA to find out how large the percentage of the dependent variable, namely capital expenditure, is determined by the independent variable, namely free cash flow, investment opportunity, free cash flow with the calculation of carry X 100%. From the table and statement above, it is known that the adjusted R square value is 0.653 Then 65.3%. So it can be said the total influence that the free cash flow investment opportunities and company size variable have on the capital expenditure is 65.3%. For C, conclusion, free cash flow has a significant relation with capital expenditure of mining. Investment operating have a negative and insignificant relation with capital expenditure. Three company size has a significant relationship with capital expenditure in mining companies. For free cash flow, investment opportunities and company size simultaneously influence capital expenditure in mining companies. Research suggestion for potential investor before making a decision to invest in a company, it would be advisable to pay attention to free cash flow variables because these variables have a significant positive impact on capital expenditure for companies, especially mining companies. It is the best to carry out operational activities more efficiently so that it will result in maximum profit, where this profit will later be reused by the company is additional capital expenditure. For future research, it is recommended to use samples from all companies registered and list on the IX so that it can be seen whether the independent variables studied also have the same influence on the dependent variable or whether the result. Capital expenditure should include other variables that have not been included in the search but have a tendency to influence the level of capital expenditure. For example, dividend policy, liquidity, and business risk. Thank you for information. Wassalamualaikum warahmatullahi wabarakatuh.